Assalamualaikum warahmatullahi ta'ala wabarakatuh. Background of the company. Berjaya Food Berhad is a part of Berjaya Corporation Berhad. Berjaya Food Berhad, also known as B Food. On 21st October 2009, it was a date of incorporation, and on 3rd December 2009, it's been converted into public listed company. While on 8 March 2011, it been listed on the main market of Bursa Malaysia Security Berhad. Next, Berjaya Food Berhad business is Berjaya Starbucks Coffee Company Sdn Berhad, Berjaya Roaster Sdn Berhad, and also Julie Beans Foods Private Limited.
Assalamualaikum warahmatullahi wabarakatuh. My name is Wan Ali Aina binti Wan Izani. So I will going to present about the financial ratio of Berjaya Food Berhad for the past 2 years. Okay, for the first ratio is liquidity ratio. This ratio is the overall measure of the firm's ability to meet its short-term obligation. So this ratio is focused on the availability of a short-term asset to finance short-term obligation. This ratio have 3 elements, which are the current ratio, quick ratio, and cash ratio. The current ratio is equal to 90,919,000 divided by 350,196,000, which it is equal to 0.26 times. Meanwhile, the current ratio is equal to 94,341,000 divided by 276,256,000, which it is equal to 0.34 times. The second element is the quick ratio. So for this ratio, the current asset we need to minus with the inventory first, and after that we'll divide with the current liabilities. The quick ratio, it is equal to the 90,919,000 and will be minus with 37,159,000. We divide with 350,196,000, which it is equals to 0.15 times. The quick ratio is equal to 94,341,000 minus with 34,068,000 divided by 276,256,000. Last element for liquidity ratio is the cash ratio. So for the cash ratio is equals to the cash and will be divided with the current liabilities. For this ratio, it is equal with 14,971,000 divided with 350,196,000. It is equal to 0.04 times. In year 2018, the cash ratio is equal with 31,378,000 will be divided with 276,256,000 is equal with 0.11 times.
Assalamualaikum warahmatullahi wabarakatuh. I am Najihatul Akmal binti Maliki, and I will be present about financial analysis of Berjaya Food Berhad. Liquidation position of Berjaya Food Berhad in 2018 is better than in 2019. This can be seen from current ratio, quick ratio, and cash ratio, where the current ratio of Berjaya Food Berhad in 2018 is higher compared to current ratio 2019. The current ratio in 2018 is 0.34 times compared to current ratio in 2019 is 0.26 times. This shows that the company in 2018 can easily make current debt payment compared to in 2019. In terms of quick ratio, the position is also better, where in 2018 recorded 0.22 times compared to 2019, which 0.15 times. So that in 2018 show there more quick asset than current liabilities. The cash ratio Berjaya Food Berhad in 2018 is higher than in 2019, which in 2018 is 0.11 times compared to 2019 is 0.04 times. This result indicates that the company in 2018 is having more funds that can pay off current liability. Although the situation in 2018 is better than in 2019, but the situation shows that the company having liquidity problem regard to the current asset is lower than current liability. It resulted the current ratio is 0.34 times that commonly acceptable current ratio is 1 or 2 times, which all the current liabilities would be covered by the current asset. Since the result of current ratio is not reached 1 or 2 times, it shows that the current asset cannot be covered the current liabilities. For quick ratio, with quick ratio of 1 indicates that quick asset equal to current asset, which resulted that the company could pay off its current liability with quick asset. Since the value of quick ratio is less than 1, it shows that the company not able to pay off all current liabilities with quick assets. Besides, cash ratio above 1 means that the company will be able to pay off its current liability with cash and cash equivalents and have fund left over. Since the value of cash ratio is less than 1, it shows that a company will be not able to pay off its current liability with cash and cash.
Is the efficiency ratio. So this ratio will be measure a company's ability to generate sales using its asset. So it is a highly efficiency in the net investment in asset that has been minimized, requiring the less capital and the less debt to continue in operation. Generally, this ratio have the 5 elements that we need to calculate. The first one is the inventory turnover. We have average collection period, total asset turnover, receivable turnover, and fixed asset turnover. Now, I will going to explain how to calculate the efficiency ratio using these 5 elements. The first element is inventory turnover, which it is equal with cost of goods sold and divided with inventory. Inventory turnover is equal with 441,216,000, which will be divided with 37,159,000, equal to 11.87 times. 2018, the inventory turnover it is equal with 357,562,000 will be divided with 34,068,000 and it gets 10.50 times. Next is how to calculate the average collection period. So average collection period is equal with account receivable and will be divided with the sales, and after that it need to times with 365 days. Average collection period in 2019 where it is equal with 27,440,000, which will be divided with 788,976,000 and multiple with 365 days, and it will get 12 days. Average collection period in 2018 where it equals to 24,281,000 will be divided with 639,741,000 multiple with 365 days. It gets 13 days. The next element is the total asset turnover. So total asset turnover is equal with sales divided with total asset. In year 2019, it is equal with 788,976,000 will be divided with 856,850,000 and it will get 0.92 times. As for 2018, it equals with 639,741,000 and it will be divided with 813,663,000 and it will get 0.79 times.
For the fourth element of efficiency ratio is the receivable turnover. Okay, this receivable turnover will be equal with the sales, which we take the credit sales, and will be divided with the account receivables. In year 2019, the receivable turnover is equal with 788,976,000, which will be minus with 14,971,000, which after that will be divided with 27,440,000. It will get 28.21 times. In 2018, the receivable turnover is equal with 639,741,000 and will minus with 31,378,000, and after that will be divided with 24,281,000 and it will get 25.06 times. For the last element in efficiency ratio is fixed asset turnover. Fixed asset turnover is equal with sales and will be divided with the fixed asset. In the year 2019, the fixed asset turnover is equal with 788,976,000 and will be divided with 275,456,000 and it will get 2.86 times. The fixed asset turnover is equal with 639,741,000 and will be divided with 234,083,000 and it will get 2.73 times.
Next is efficiency ratio. Efficiency position of Berjaya Food Berhad in 2019 is better than 2018. It can show from inventory turnover, average collection period, total asset turnover, receivable turnover, and fixed asset turnover. The inventory turnover in 2019 is 11.87 times higher than in 2018, which is 10.5 times. This shows that the company in 2019 having strong sales compared to in 2018. In terms of average collection period in 2019, also better than 2018 because a lower average collection period is generally more considered than a higher average collection period. A low average collection period indicates that the organization collect payment faster. Moreover, the total asset turnover in 2019 is higher than 2018, where in 2019 resulted 0.92 times and in 2018 resulted 0.79 times. The higher the asset turnover ratio, the more efficient a company is at generating revenue from its asset, which the better a company is performing, which means that the total asset turnover position in 2019 is better than from in 2018. For receivable turnover position of Berjaya Food Berhad in 2019 is 28.21 times is higher than from in 2018, which is 25.06 times. It shows that the performance of receivable turnover in 2019 is better than 2018 because the higher the ratios mean that the companies are collecting their receivable more frequently throughout the year. Fixed asset turnover in 2019 is 2.86 times, while in 2018 is 2.53 times, which 2019 show higher ratio compared to 2018. A high turn is more considered because it indicates that assets are being utilized efficiently and large amount of sales are generated using a small amount of assets.
Assalamualaikum. I am Syafiqah Amira and I will present about leverage ratio and profitability ratio. Leverage ratios will be used to determine on the ability of the company in using debt as a way of investing money to the other investors. Besides, leverage ratios also used to discover the ability of the company in repaying the debts, which relates with the fund used for investment. There are three elements of leverage ratios, which are debt ratios, debt to equity ratios, and time interest earn ratios. The table shows the calculation of leverage ratios by using three elements for Berjaya Food Berhad for the past 2 years, which is 2019 and 2018. The first element is debt ratio, where total liability divided with total asset and multiplied with 100%. In 2019, the debt ratio is 57%, while in 2018, the debt ratio is 52%. Next is debt to equity ratio, where total liability divided with total equity. In 2019, the debt to equity ratio is 1.34 times, while in 2018, the debt to equity ratio equals to 1.10 times. And lastly is time interest earned, where earning before interest and taxes divided with interest expense, where in 2019, the time interest earned is 3.51 times, while in 2018, the time interest earned is 2.18 times.
Overall, the performance of leverage position in Berjaya Food Berhad is good in 2018 compared to 2019. This can be seen from debt ratio and debt to equity ratio, where lower debt ratio is more considered because it shows that the business is more stable. Since debt equity ratio in 2018 resulted only 52%, which lower compared to 2019 that resulted 54%. It can indicate that debt equity in 2018 is better than from in 2019. For debt to equity ratio in 2018 is 1.10 times, lower than in 2019 is 1.34 times, where it showed that the company in 2018 is more stable financially business. However, the performance of time interest and ratio in 2019 is better than in 2018 because time interest and ratio in 2019 is 3.15 times higher than from 2018, which is 2.18 times. The higher the ratio of time interest and it can meet more better of its interest obligation.
Next is profitability ratios, where it will be used to evaluate the company's capability to create a suitable rate of return by using its assets and control its expenses. There are 5 elements of profitability ratios, which are gross profit margin, operating profit margin, net profit margin, return on asset, and return on equity. The table shows the calculation of profitability ratios by using 5 elements for Berjaya Food Berhad for the past 2 years, which is 2019 and 2018. The first element is gross profit margin, where gross profit is divided with sales and multiplied with 100. In 2019, the gross profit margin is 44.08%, while in 2018, the gross profit margin is 44.11%. Next is operating profit margin, where operating profit divided with sales and multiplied with 100. In 2019, the operating profit margin is 8.25%, while in 2018, the operating profit margin is 5.54%. Next is net profit margin, where net profit divided with sales and multiplied with 100. In 2019, the net profit margin equals to 3.1%, while in 2018, the net profit margin equals to 0.034%. The next element is return on asset, where net profit divided with total asset and multiplied with 100. In 2019, the return on asset is equals to 2.8%, while in 2018, the return on asset is equals to 0.027%. The last element is return on equity, where net profit divided with shareholders' equity and multiplied with 100. In 2019, the return on equity equals to 6.6%, while in 2018, the return on equity equals to 0.056%.
Profitability ratio. Net profit margin in 2019, higher ratio compared to 2018. The net profit margin in 2019 produced 3.1%, mean that the company has to generate 0.031 ringgit of net income for every ringgit of sale. while in 2018 produced 0.034%, mean that the company has generated 0.00034 ringgit of net income for every ringgit. The higher net profit margin consider that a company more efficient at converting sale into actual profit. The performance of a company in 2019 is greater than in 2018, and the higher ratio, the more effective a company at its cost control. For the return on asset, the company in 2019 is better than in 2018 for their performance. In 2019, which 2.8% higher than in 2018, which is to 0.027%. Higher ratio is more considered to investor because it shows that the company is more effectively managing its asset to produce net income. For the return on equity in 2019 is higher than 2018. In 2019 recorded 6.6% and in 2018 recorded 0.056%. This shows that the company of a return equity in 2019 is better than in 2018 because higher return on equity indicate that the company is raising its investor fund effectively. For the operating profit margin, in 2019 performed greater than in 2018. In 2019 resulted 8.25% higher compared in 2018 resulted 5.584%. The higher operating profit margin is more favorable because it shows that the company making enough money from its ongoing operation to pay for its variable costs and also its fixed costs. For the gross profit margin, in 2018 performed better compared to in 2019. In 2018 recorded 44.11% higher than in 2019 recorded 44.08%. A higher gross profit margin is indicate that the company can make reasonable profit on sale as long as it can keep overhead costs under control.
Okay, so the last ratio, which is market ratio, is used by the investors to predict the earnings and future performance of the company. The present and future investors are using these ratios to determine if shares of a company are too large or below cost. There are 5 elements that is used as to calculate the profitability ratios, which are earning per share, dividend per share, dividend payout ratio, price to earning ratio, and dividend yield. So these are the calculation for the elements used in the market ratio. The first one, which is earning per share, it can be calculated by dividing net income available with number of ordinary share issued. As in 2019, the company's earning per share is equal to RM 0.0664, while in 2018, the earning per share is RM 0.0031. The next one, which is dividend per share, the formula is ordinary dividends divided by number of ordinary share issued. As in 2019, the company recorded RM 0.0485 for its dividend per share, while in 2018, it recorded RM 0.04. The third one, which is dividend payout ratio, it can be calculated by dividing dividend per share value with earnings per share value and then multiply it by 100. As shown in the table, the dividend payout ratio for 2019 is 73.04%, while in 2018 the ratio resulted in 1,290%. The next one, which is price to earning ratio, the formula is calculated by dividing market price per share with the value of earnings per share. The calculation in 2018 resulted of RM 358 ringgit 6 cents, while for 2019 it was resulted as 60 ringgit and 72 cents. The last one, which is dividend yield, the calculation formula for this ratio is latest annual dividends divided by market price per share and then multiply it by 100. As in 2019, the dividend yield value is 4.37%, while in 2018 the value is 3.6%.
That is for the market ratio. Earning per share in 2019 is higher than in 2018. The earning per share in 2019 is RM 0.0664, while in 2018 is RM 0.0031. This is because a higher earning per share ratio often make the stock price of company rise, which the company is more profitable and the company has more profit to distribute to the shareholder. Dividend per share. It is keep improving since the value of the dividend per share in 2018 to 2019 is consistent. In 2018, it's recorded that the dividend per share is RM0.04, while in 2019 it is 0.0485. This is indicate that the management willingness to make consistent payout to investor. Hence, an increasing trend of the dividend paid show that management believe that the business has adequate robust cash to flow to support dividend payment. For the dividend payout in 2018 is 73.04%, which a payout ratio between 55% to 70% are considered high because the company is expected to distribute more than half of its earning as dividend, which imply less retained earning. A higher payout ratio viewed in isolation from the dividend investor perspective is very good. Yet, it can limit the company's ability to grow dividend in the future, where implies low retained earning for the company growth. The dividend payout ratio for 2018 is 1290%, which is very unsustainable because the ratio is 150%. For the dividend yield in 2019 is greater than in 2018. A company with a high dividend yield predetermine the investors are getting high compensated for their investment. For the earning ratio in 2018 is better than 2019. In 2018 recorded as 358.06 ringgit, while in 2018 as 16.72 ringgit. The company with a high earning ratio commonly show positive future performance.
Okay, and the last part, which is recommendation and conclusion. One of the recommendations that we can suggest for the company to improve its financial performance is by monitoring their cash flow. In business, cash is the most important asset as it is used to pay the expenses as well as to make investment for the company. Cash flow can be calculated by determining the revenues and expenses. If there is more money coming into the account than going out, it means that the company is having a positive cash flow. A positive cash flow can ensure that the company is doing well and stable in its financial performance. Other suggestion is to prepare a strategic planning for their company. Usually, a business may take time to develop and become successful or able to achieve their goals. Therefore, the company must create a financial strategy for the future of the business for a few years outlook. Each year's strategy needs to define how the company will grow their business and how to use their financial sources efficiently. It also means that the strategy made is not only focused on how the company make money and increase their revenues, but also on how to invest it efficiently and effectively so that the company can increase its profit. So, in conclusion, it is very important for every business and organization to assess the performance of the firm by analyzing their liquidity, efficiency, leverage, profitability, and market ratio. These ratios are widely used for making important decisions and future forecasting of the financial performance of the company, as well as analyzing the company's performance over a specified period of time. It also provides an idea to the investors in deciding whether to invest their funds into the company or not. Its relationship between the financial statement accounts also can help the investors, creditors, and management of the company to understand how well a company is doing in running its business.